This is Business Week Armenia, CivilNet's weekly business digest. Here's what you need to know this week. Fitch, one of the big three credit rating agencies, has declined to lower Armenia's sovereign credit rating following Azerbaijan's lightning offensive against Nagorno-Karabakh last month, citing Armenia's resilient economy and the localized nature of the fighting. The hostilities have had limited macroeconomic spillovers so far, and the conflict has not affected Armenia's rating or outlook, Fitch said in a statement late last week. The agency added, "The latest fighting also does not have immediate negative implications for Armenian banks because the sector's direct credit exposure to Nagorno-Karabakh was limited." In July, Fitch upgraded Armenia's long-term foreign currency issuer default rating from B+ to BB- with a stable outlook, citing last year's extraordinary inflow of migrants from Russia. Armenia's gross domestic product grew by 12.6% last year, largely on the back of an unprecedented influx of tens of thousands of Russian citizens, many of them highly skilled workers. Fitch has said it expects this dynamism to continue and is forecasting Armenia's economy to expand by more than 7% this year. Earlier, Fitch said it anticipates that a substantial proportion of the new immigrants will stay in Armenia for at least 2 to 3 years. Despite the upgrade, Armenia's BB- rating is still considered speculative grade, commonly referred to as junk, indicating an elevated vulnerability to default risk. Armenia's previous credit rating was considered highly speculative. Economic activity in Armenia is weakening after last year's surge, but remains strong. That's the headline takeaway from the Eurasian Development Bank's latest regional macroeconomic update out this week. The bank said continued strong showings in Armenia's services and construction sectors are driving the country's economic growth this year, in addition to high cash inflows from abroad, which amounted to about $3.8 billion in the first 8 months of the year. The Armenian economy's growth rates will remain high until the end of the year, the bank concluded, adding, "There is also a likelihood of recording a higher GDP level than previously expected due to an increase in consumer demand given the relocation of the population of Karabakh to Armenia." Last week, the International Monetary Fund hiked Armenia's projected real GDP growth this year from 4.5% to 7%, the highest projection for any former Soviet country and well above the 4.6% expected growth average for the region. The EDB is a Kazakhstan-based international financial institution that promotes economic projects in Armenia and a number of other former Soviet countries. In April, Armenia greenlit a $64 million deal to buy out a portion of Russia's stake in the bank, increasing its shares from a meager 0.07% to 4.23%. That came as part of a redistribution of capital that saw Russia lose its majority stake in the bank, a move seen as designed to shield the institution from potential US and European sanctions. And in February, the Armenian government signed a multi-million-dollar memorandum of understanding with the EDB and the mining company Lydian Armenia to revive operations at the long-stalled Amulsar gold mine. Under that agreement, the bank is expected to pour $100 million into the project. Economy Minister Vahan Karobyan this week presented the Armenian government's plan to create a so-called dry port to senior officials from Saudi Arabia and the United Arab Emirates amid an ongoing search for international investors. The officials agreed to exchange information on issues of mutual interest and remain in contact on the matter, according to official readouts of the talks. Last year, the government put forward a proposal to set up a dry port in Armenia's second city of Gyumri, a plan officials say could help unlock landlocked Armenia's economic potential. A feasibility study on creating what would be a large industrial park and special economic zone is underway and is expected to be completed by the end of the year. In March, we sat down with project lead Charles Malas to talk about the venture. Here's some of what he had to say.
The concept that I have proposed for Gyumri, it is effectively a dry port industrial park special economic zone. The cost and capex of this project is going to be somewhere just above $100 million.
You can find our full conversation about the Gyumri Dry Port project on our website and YouTube channel. And as always, please follow CivilNet for the latest news and independent reporting from our contributors on the ground here in Armenia.